want to speak to the world's, or one of the world's most accurate currency forecasters, Stephen Gallo from Schneider Forex, joins us now. I turned you into the, the world's most accurate forecaster.
We're not there yet, but
not there yet.
Soon.
Okay, so Stephen, rate day, BOE ECB meeting, and I guess the thing that we're really looking from Trichet, the words that we're looking for is strong vigilance, right?
Yeah, I think so. Everything we've seen from the most important ECB speakers between the last meeting and now suggests that they will want to push away with a rate hike in July. I think if I were in Trichet's shoes, though, what I would want to do today, what I'd want to accomplish today, is to obviously signal a July rate hike if that's what the intention is, but also to leave the markets with the impression that I could move rates higher beyond July. I would want to keep euro bears on the defensive because I would want them to go away with the notion or the belief that we're still in a tightening cycle, a rate tightening cycle.
And the euro right now at a 1-month high versus the dollar, is that in anticipation of further rate rises? What's behind the movements that we've been seeing?
I think market participants are trading cautiously. I think, you know, if things go as expected, we will get strong vigilance, and I think the market is prepared for that.
High enough, though, to bring down inflation? Big ECB concern right now.
Is what high enough to bring down?
Will they raise interest rates high enough? Will it do the job in bringing inflation under control?
Well, I don't think inflation is out of the control in the euro area. I think inflation expectations are very well anchored at the moment. I think the eurozone, for the most part, has very stable price pressures. I think that this would not be the case if the euro didn't exist. I think you would see countries like Spain, Italy, potentially even France, with very high levels of inflation, almost too uncomfortably high if it weren't for the euro. So I think one of the things that we've seen, one of the benefits that the euro area or Europe has gotten as a result of the euro is stable prices, definitely.
What about the Bank of England? They're also meeting today. Economic data has been pretty poor, so obviously expecting rates to stay on hold? Yeah,
probably. I think the Bank of England should have been lifting interest rates in 2010, though. They're way behind the curve.
So what can we expect this year?
I don't know. I really don't know.
Yeah.
It all depends on, it all depends on how entirely separate and independent the Bank of England is from the government. Do the Bank of England want us to expect more quantitative easing because there are concerns about the fiscal deficit? We saw those headlines from Moody's earlier this week or yesterday. I mean, do the Bank of England want the markets to expect more monetization or financing of the deficit, or do they actually want us to believe that the central bank is going to keep its credibility in place over the medium term? That's the big question. I think it's more a question of that than whether or not they'll hike rates or not hike rates.
So then what does all this mean for the pound?
Well, I think the pound is struggling at the moment, but at the same time, its role as a liquid alternative to what's going on in Europe, its next door neighbor, is obviously still intact. And I think that's why in euro sterling we're seeing the pair struggle as it gets up to that 90 level. We haven't seen much headway beyond 90 in euro sterling. But at the same time, I think the pound is struggling because the outlook for growth, the growth potential for the UK economy is very weak in my view. And at the same time, the UK, as far as the developed world is concerned, pretty much has the most pernicious combination of weak growth and too high inflation. And my view for sterling, which is structurally bearish, is I think that pernicious combination of weak growth and too high inflation is ultimately going to keep the pound weak over the next sort of 3 to 6 months.
Okay, Stephen Gallo of Schneider Forex.